The past couple years have been challenging for the restaurant industry, especially the full-service dining sector. But there's one set of restaurants bucking the trend: Texas Roadhouse and LongHorn Steakhouse.
They really are standing sort of above their peer group in terms of overall performance and in terms of...
Yeah, certainly the target audience, I would assume, is in this photo right now. At least like my parents seem to be interested in, I think, Texas Roadhouse in particular. I think they have specials, especially like early bird specials, things like that. And so to me, it almost stands out sort of similarly to Chili's, where I think in COVID and with all the inflation, Chili's actually started like combating that trend by having like that $10.99 deal. And I think Texas Roadhouse stands out to me in a similar vein. I don't know how often they have this deal, but it's certainly something that people seem to be interested in and perceive as a good value, especially in today's market. And so the companies who are doing that seem to be starting to differentiate themselves from their competition and actually holding out pretty strong. And in some cases, like Chili's, they're actually growing quite a bit while others are starting to fall behind.
Of just growth and success right now in the restaurant business.
Between 2019 and 2024, the two companies' sales are up over 55% and over 80%.
Wow, that's quite a bit of growth. Yeah, I was just mentioning how they could even be growing right now, and this is exactly what I meant. 80% is a very respectable amount of growth, especially in a time of inflation, especially where I believe the general market trend right now is for folks to eat out less than they were before, especially at these sort of like sit-down restaurants.
2024, Texas Roadhouse became the biggest casual dining restaurant, surpassing Olive Garden, who held the top spot since 2018.
These value steakhouses exist.
Man, the OG Olive Garden.
In kind of the sweet spot where it's tough to replicate the experience. I think that's why you've seen Roadhouse and LongHorn deliver trends that are, above what the industry's seeing.
So what's driving consumers to these steakhouses, and what makes them a standout in the restaurant sector? Texas Roadhouse and LongHorn Steakhouse parent company Darden Restaurants have significantly outperformed the S&P over the past 5 years. Darden Restaurants owns a number of chains besides LongHorn. Olive Garden is the most profitable and by far the biggest of its brands, having done over $5 billion in sales in fiscal 2024. LongHorn Steakhouse represents about 25% of the business, but most importantly, it's the company's fastest growing segment.
There's something about steak that it really rings true to the consumer as still being kind of an elevated or a premium consumption or dining experience. And so I think it's fair to say that it has been a key growth driver for the stock and something that investors are always keen to focus on whenever Darden reports their earnings and to see how LongHorn is performing.
Here's a look at LongHorn's quarterly same-store sales growth compared to Darden's other businesses. While LongHorn Steakhouse has been growing its sales, Olive Garden's performance has been relatively flat, and some of the fine dining concepts like the Capitol Grill have been a drag on the portfolio.
That is very interesting. The Capitol Grill is pretty famous. I've certainly been to one of those before. Certainly I've been to an Olive Garden multiple times in my life. I actually don't know if I've ever been to a LongHorn Steakhouse. I might have to check them out after this segment.
Its fiscal 2025 third quarter, LongHorn sales increased about 2.5%, which was only about half the growth analysts were expecting. However, it was still a standout for Darden.
The fact that LongHorn, they missed maybe what their expectations were, but still posted some positive same-store sales numbers in a really challenging environment, I think is still good news. Maybe it's not the best news for Darden, but it's still, I think, better than what a lot of the other casual dining chains will end up reporting as we get into the earnings season here.
So over the next 12 months, we have an equal weight rating on Darden and would expect the stock to perform kind of in line with the broader restaurant sector. We do expect Texas Roadhouse to deliver trends that are above the industry, but already trades at a higher valuation than the rest of the industry. And so we think that outperformance over the next 12 months is already priced into the stock.
Steak is often associated with high-end restaurants whose price points may be out of reach for the average US consumer. These chains have made steak accessible. Experts say that value is one of the primary reasons why these
Yeah, I just referenced this earlier. This is the early dine thing. And so yeah, for $8.99 for you to be able to eat, this is saying, I think Monday to Thursday until 6 p.m., I believe is what it says on this sign. And so this is definitely for sort of the older retiree crowd, is my expectation, who's having dinner before 6 p.m. and able to actually make it to a restaurant before 6 p.m. to get this deal. I don't know who else would be in that category, but again, similar to like Chili's, who I think has like a $10.99 deal, an $8.99 deal to have steak is like fantastic. Who wouldn't want to do that? I agree with their sentiment of, I think steak is seen as a premium, certainly compared to, I think Chili's has like, it's like a cheeseburger or something like that, maybe some similar type of standard casual dine-in food, but a steak is in a category of its own. So to be able to have a steak for even less than you can have like a cheeseburger at a Chili's, like, of course, that just screams value.
These restaurants are outperforming. Plus, there's a major focus put on experience, portion sizes, for example, at LongHorn, or a strong workplace culture at Texas Roadhouse. The company offers.
I'm also curious if there was a trend. I'm trying to recall now. I think in COVID, I think red meat and meat prices were pretty high at that time. And so there's also a good chance that this trend is sort of people seeing especially value for things that they saw as unattainable in that COVID timeframe. I'm curious if maybe we'll see a similar trend right now. Like eggs are the outrageously priced item, at least in America. And so I'm curious if there's going to be like some standout restaurant that is like egg focused, like some omelet restaurant out there who's going to become so prevalent in the next 3 to 5 years because eggs were seen as like maybe a luxury for some folks, and if they just have a great deal, that like they start to stand out. I'm curious if that had a portion of the sentiment that is leading to this trend that we're seeing now. I don't know if they'll cover that though.
Its restaurant managers the option to earn a percentage of the store's profits.
You can't underestimate the investment that these chains make in their general managers at the store level, right? The store level manager really is probably the most critical piece to any restaurant chain's success. And so I think Texas Roadhouse, to a great degree, I think LongHorn as well, do a really good job of developing that, sort of local unit level talent and give them the tools to succeed.
An uncooked ribeye at a grocery store near our studio here in Englewood Cliffs, New Jersey, costs about $22 for a 20-ounce steak. A ribeye of the same size and cut, cooked any way you like it at a Texas Roadhouse about 8 miles away, is only $9 more. And it comes with 2 sides, like fries or veggies. This relatively small price difference has especially benefited these value steakhouses.
That is a pretty good deal. If you're basically spending 50% more for the raw good versus a cooked version plus an accompanying meal with it, with some sides, that's a pretty good deal as far as I can tell.
Particularly in periods where we see food inflation, inflation in beef in particular, consumers develop what we would kind of refer to as a meat anxiety. We'll actually see.
I see. So this is what they're mentioning here. Meat anxiety. I don't know if I've heard this term before, but I think they are referencing this exact thing where like meat was getting pretty pricey at certain points in COVID, and I think with the inflation recently. And so I could see it as something that is, again, kind of seen as almost unattainable to some folks. And again, having it be prepared and in a very accessible way for a very reasonable price is going to make people want to shop and dine at that particular location.
Is consumers will opt to not buy steak at the grocery store, even though on a dollar price point, it would be cheaper than going to a Texas Roadhouse or a LongHorn, and opt to have their steak consumption done at these value steakhouses because they know it's going to be cooked right. If it's not cooked right, they can get a new meal.
One prominent challenge that steakhouses must contend with is the volatile cost of beef. To manage these costs, Texas Roadhouse and LongHorn Steakhouse.
So I'm going to actually try getting back to that graph here that they just showed a moment ago. Yeah, so here it starts basically all the way on the left side at 2020. And so I think this is exactly what I was referencing, which is you see this huge spike happen, 80% increase from during this 2020 span, I assume due to COVID. And then again, shortly after 2021, it also spiked up again. So I think that's exactly what I was referencing. Though they went through so quickly on this, you wouldn't really be able to digest this graph in its standard form. But I think this is exactly what I was referencing and what they're referencing now, which is the prices are so high. And I think they bring up a good point on the cooking side, which is, if it's going to be, 50% more is what that other individual highlighted, or even if it's twice as expensive, but you get sides with it. And you can also guarantee that it's going to be cooked the way that you want it to be cooked. Because if you cook it at your own house and you mess it up, you got no one to complain to. You can't return it to yourself and ask for another one. And so having that kind of peace of mind and sort of de-risking that maybe a luxury item or good for you does bring value in and of itself.
Volatile cost of beef. To manage these costs, Texas Roadhouse and LongHorn Steakhouse secure contracts for meat far in advance of when they will need it.
What they are basically doing is negotiating prices on not only beef, but on beverage, on potatoes, on side dishes, on alcohol. So you've got these big procurement offices at Texas Roadhouse and at Darden that has set up essentially a pricing program. And then as general manager, you're just buying off of that, at a negotiated price. I think these are sort of abilities that larger chains have that some of the smaller mom and pops don't have.
That does, of course, leave some risk for the market price to drop below the contracted price. But locking in costs in advance creates predictability and allows operators to focus on other parts of their business. The chains are also working to keep prices below inflation. For example, Texas Roadhouse said its prices are up just over 2% year over year in its second quarter of 2025. Meanwhile, it expects overall commodity costs to increase 3 to 4% for the year. By absorbing some of those inflation costs, the restaurant hopes to draw in more customers.
You hope that you make that up either in the more people you have through the restaurant, or you hope that you make it up and they eat more sides so they get more drinks. Because the good thing is, once you have them in the restaurant, then you have your staff there to hopefully, hey, let's tack on a dessert, let's tack on an appetizer. There's all kind of opportunities to add incremental purchases to the overall ticket.
But being a budget steakhouse isn't a winning formula on its own. Outback Steakhouse is the largest steakhouse chain by number of locations, but makes significantly less per restaurant than both Texas Roadhouse and LongHorn Steakhouse. Its foot traffic has also been declining for the past 3 years.
I think with Outback, that brand is still in the process of...
Yeah, I've actually been to an Outback in the last few years. The service was terrible. I was kind of having a nostalgic moment of, I think I was seeing some ads. It had been years since I had gone to one. Obviously, post-COVID, people were just doing stuff in general. They were just yellowing whatever it was. I guess Outback Steakhouse was it for me. Got to be balling on a budget, I guess, around here. And so I tried to go to one, and service was atrocious. I think one of the worst experiences that I've had basically at any restaurant ever. And so I don't know if they were just having shortages. I think that was also something they were complaining about at that time, was server and waiter shortages and staff shortages in general. But I don't know if that is going to be true, especially if all these other locations are kind of getting better over time and they're getting more traction. Maybe it has to do with underinvestment in these locations and maybe poor management at these chains. But it certainly wasn't an enjoyable experience. I don't know if I'll ever go back after that experience because of how poor it was. I don't know if anyone from Outback is watching, probably not. But if you want to hit me up with a sponsorship or something to go try it out and change my opinion, I'm open to it. But otherwise, I'm probably going to stick to not going back and maybe trying out one of these other places and see what they're like nowadays. And so maybe it does have to do with management. They mentioned Texas Roadhouse, the managers have some type of profit sharing going on. And so they're extra incentivized to make sure that their workers and the people who are going there are having a good experience, and maybe Outback just isn't doing that same type of management or incentives.
Really optimizing their in-store operations, the menu offering, and finding that right balance of value, both from a portion size, overall experience in the restaurants, and then the actual value from the amount of food you're getting. LongHorn and Roadhouse are more established operators.
Outback is over 20% franchised, while LongHorn Steakhouse and Texas Roadhouse are less than 10%.
The trend right now tends to be toward restaurants franchising more rather than owning and running company-owned stores. I think that ownership and the management that you can give that and the autonomy that gives you as a restaurant company when you own your own stores, I think that certainly helps.
That is interesting, especially because McDonald's, for instance, was one of the big industry leaders of franchising. And that seemed to have been the trend. Like, everybody was franchising everything. Like, you'd have one store and then you'd start franchising for your second, at least in the last like decade or two, maybe even a little bit beyond that as well. And so it's curious that these locations are actually more company owned, which maybe is leading to more consistent and higher quality experiences. I don't know if I've observed this trend in the past, but I'm curious to see if this is going to be a sustained trend where franchising is no longer seen as beneficial for a company for expansion, because you lose that quality and you lose the consistency location to location unless you can fully manage those experiences and the locations and the staffing that go into making one of these branches successful,
especially in a category like this.
Outback's 2024 check average is also higher than its peers, and its menu has become too big for its own good. In February 2025, the chain announced that it was shrinking its offering by nearly 20%. The CEO of its parent company, Bloomin' Brands, said, quote, "We need to make fewer items, but we need to make those much better," on its 2024 fiscal fourth quarter earnings call. Bloomin' Brands' share price dropped 17% midday on February 26th, when it reported 2025 guidance that was lower than Wall Street's estimates.
The playbook itself isn't hard to do. It's simplify, it's innovate, it's give your people what they need and really invest in the people and do it at a price point that consumers are going to find palatable. It's easy to say, it's hard to do. And I think as long as both LongHorn and Texas Roadhouse continue to have that formula and continue to do that, clearly they've found a niche that consumers are going to continue to come back. And so I would be generally pretty optimistic about their future.
Thank you for watching. If you've enjoyed what you've seen, please hit like or subscribe. I'll see you around.